Wonderful good day, ladies and gentlemen. Mines and Money 2015. We are in the meeting booth of Osisko Royalties, and now we have Sean Roosen here, the CEO and chairman of Osisko Royalties, to give us a lovely update about the company. Sean, pleasure to be here.
Well, it's good to be with you again.
Osisko Royalties. I mean, we mustn't explain the company for sure, but honestly,
Sure.
How did you see 2015? It's a tough year for the industry, but I believe for you guys, it's heaven.
Yeah, well,
because you get so cheap all the good properties.
Well, we are a bottom of the market business plan in terms of a royalty company. Currently, we have the top line royalty of the Canadian Malartic, which gives us about 28 to 30,000 ounces a year of zero cost gold. And then the Eleanor mine, we have a 2% royalty there that slides up to 3.5%. That'll give us about 10 or 12,000 ounces of gold once that mine ramps up. So 2 Quebec assets are the cornerstones. As we go forward, we're close to 50 royalties in the company now. As you know, we IPO'd the company in June 2014, so we're in 18 months of business. We were able to grow the company significantly since we started. We IPO'd at $520 million. We're now about a $1.3, $1.4 billion market cap.
Wow.
And we've got quite a bit of cash and no debt. So we have about $400 million available to invest, and we have a $150 million undrawn debt facility that we could do. So total about $550 million available to us. And we're continuing to look at opportunities. We're deploying capital into projects that we believe in. We've had a Canadian bias as of late because there's a natural hedge with the Canadian dollar being down. The Canadian operators and the Australian operators have had better margins. So that's been our primary focus, and that'll continue on through the end of this year and into next year, I believe. So that's where we're seeing the opportunity. We're seeing the value gap. You know, in Canadian dollars, gold is at $1,430 an ounce. For example, when we built Canadian Malartic, which is now Canada's largest gold mine, we used a Canadian dollar value of about $775 gold for the feasibility. So the margin on that mine is almost more than what the gold price was when we built it. So there is a downtrend in the sector, but I think that if you look deep enough and you understand some of the assets, there are some assets that are performing.
Yeah, absolutely. As you said, you have 50 royalties by now. Maybe a stupid question, but I want to ask it. How many royalties do you think you can handle? And on the other hand, the 50 royalties you have now, where do you see, let's put it that way, the average maturity by now? Of course, it's connected with the mine life, that's for sure. Yeah.
On active mines, we have 3 producing royalties right now. On development projects, most of is where the bulk of those royalties are. They're between the merger between Virginia and Osisko created most of those royalties that we brought forward with us, and we recently purchased a package from Teck Cominco, which had quite a number of royalties in it as well.
Yeah.
So these are our development and exploration assets for the bigger numbers, but we see natural growth within the portfolio on things like Pandora, which was sold to the joint venture between Agnico and Yamana. That could be in production fairly soon. Island Gold, which is operated by Richmont, we have a royalty there. I have a royalty on Integra. Most recently, we just bought a royalty on Monday on the Barkerville Gold System, which is a very interesting story.
Yeah, but I think a lot of work, huh?
There's about 1,400 holes that are in the current resource package, so there'll be about 16,000 meters of confirmation drilling to go in, and we're hoping to see somewhere around 2 million ounces of in-pit resource develop. At the near term, based on there's already a published 43-101 that is 2.5 million of measured and indicated, and another 2 million of inferred. So we're going to a much more conservative financial model on it, and hopefully, that'll bear fruit at some point. We're also one of the largest shareholders of Falco Resources, which is a project that's close to our heart, which is the Horn 5 deposit, and then we have an equity position in Nile Gold as well. Which is about.
You're also with TerraX Minerals, right?
And we're the largest shareholder of TerraX Minerals. We're the second largest shareholder of Nighthawk Minerals. So we've in some of these positions we came forward with us from the Osisko One days, and the Osisko Gold Royalties shareholders really inherited those positions at not much cost. Okay. So we are seeing dominantly Canadian portfolio at this point in time, dominantly gold. We do have some exposure to bulks, like we are the largest shareholder of LIF. Which pays us about $6 million a year in dividends, which is the Labrador Iron Ore Formation royalty company. So that's been another investment. So we have about 20% of our investment outside of precious.
Okay, super. So that means you can handle X royalties, that's for sure. Yeah, with
Yeah,
the team.
I think
That's all no problem. I presume. Yeah.
we're going to be going 7 days a week, 24 hours a
Super.
day. It's a great time for
Yeah.
royalty companies to be financing these projects, and I think that we all understand that this is a cyclic industry, and continuity is important in terms of having enough resources when the cycle does turn, and to see projects that are ready to go. So, what we're seeing is the projects that are in the resource development space that are going through their permitting process. The commodity price doesn't much affect the viewpoint on those projects. We value things in today's prices, but you have to be a little bit assume that these cycles have been around forever. I don't think they're going away anytime soon.
That's right. And we even hope that it's getting better for the let's say for the investors also. What I wanted to ask you is, any consideration in the future, let's say, to go outside Canada? I mean, Canada is one of the greatest mining jurisdictions in the world, that's for sure. You live Canada, you understand Canada perfectly, yeah. But maybe is there any tendency to say maybe we look at the US or even Latin America?
For sure. I mean, the way that we rank things is Ontario, Quebec, BC, the rest of Canada, and then after that it really just comes down to the quality of the project and the operator. If it's an operator in a jurisdiction in which they're adapted to, I have no problem investing in that.
Perfect.
So we really look at, once we're outside of Canada, we look at just the operator, and if we can understand that the quality of the asset, and we believe that the operator has things under control, that's the most important thing for us in our investment discussion.
What are your main targets for 2016? What do you want to achieve?
Well,
another
we
10
want
to 50 royalties?
We want to continue to grow the company.
Yeah.
We think there's a great opportunity for us to be very active right now. In terms of what we want to do is we would like to build some more cash flowing assets. We've filled out pretty good on the development portfolio. So we'll be focused on the opportunities that are coming. We think that 2016 we may see some big opportunities on some bigger producers. So we've kept our powder somewhat dry while we wait this thing out and see how it goes out. The rebalancing of the debt load on the major and mid-tier companies is not complete yet. And I think that there's a push from shareholders to make that happen. So the royalty companies are part of that solution. We're the fourth largest royalty company in the space. So we're going to be working very hard to be competitive and to achieve some cash flow assets.
Yeah, fantastic, great. Last question: where do you see the mining industry in the next years? What do you think went wrong, maybe?
I think that what we've got to see is a cleanup of the current balance sheets. A more rational approach towards debt and hedging is obviously pervasive now. I think that there was, both from the operators and from the investors, there was a push to leverage up at the low cost on debt, which, as we've seen, it's not turned out to be so cheap after all. So I think the asset allocation in terms of how projects are financed between debt, equity, and streams is going to be rethought. But we're probably in for another 2 years of sorting out the balance sheets at the current commodity prices. And I think, as a lot of people said, I mean, the commodity prices are unusually low, considering this has been a long bear market for commodities. This is on 240 weeks plus. And it's not a sustainable situation without a price increase in some commodities. So we will see these commodities come out of it because there will be production comes offline. There will be fundamental changes in the way that the metals are managed, in terms of how materials are deployed and surging, and just in terms of the way the environment's being managed. So we'll see some metals will be big winners and some metals may see some pressure as we transition in the way we use them.
Which are the winners? What do you think?
I think copper and zinc are pretty solid, and nickel's not sustainable at this price level. It has to go up because it's just not a sustainable price. So when that happens, I don't know. But it's been beaten up far more than it can sustain. It's not at an economic level at which production maintains.
Yeah, and of course I have to ask, because you do a lot in gold. What's the view on gold then?
Well, I think gold has done its job in every currency except U.S. dollars. So I think where we are is, we've got a massive U.S. dollar trade on it. It's been a strong trade for a long time now. And my view on gold is it somewhat measures the fear of the U.S. economic system. We will have a rollover in the dollar trade at some point, and gold will be the benefactor of that. But when I look at gold in every other currency, I see it at 14.20 Canadian. I see the Australians are doing extremely well with the lower dollar. But in the end of the day, nobody in the U.S. has an interest in a strong U.S. dollar over a sustained period. It's pretty hard on the export business. So something will happen to the U.S. dollar at some point, and gold will be the benefactor of that. I don't see it in the near term, but maybe a year or two out, as the U.S. economy can't sustain the strength of dollar and be competitive in international markets.
Yeah, definitely. Sean, thank you very much. Merry Christmas. All the best for 2016, and I'm sure you keep it going.
All the best, yeah. 2016 will be interesting.
Absolutely. Thank you very much. Yeah, ladies and gentlemen, it was Sean Roosen, the CEO and chairman of Osisko Royalties. And yeah, well, you heard it. The company is in perfect shape. Fourth largest royalty company in the world. $550 million are available. As Sean said, the firing power. And I think this is, probably one of the best times for the company to collect high value and high quality assets and get a royalty out of that and bring mines into production. They already get over 40,000 ounces per annum as a royalty. So fantastic cash inflow, and company is outstanding. That's what I can say about, and check it out. Thanks for watching us. Bye bye from London.